All right, apologize for the delay there, everybody. Good morning. Welcome to Technical Analysis versus Jim Cramer. Got Matthew Tuttle with us, and we're going to throw some shade at Jim today, but he really wasn't very animated last night. Just kind of gave a little bit of yammering on about, bond market situation and oil prices, more or less, and kind of dug into a couple things. And I noticed some caller was like asking what the 5-year outlook for Target was. I've been short Target for a while now. How about you?
Lucky for the caller, Jim didn't give his opinion on that.
Yeah, I'll say. Um,
I'd hate to imagine sitting in something for 5 years taking losses based on Jim's pick.
oh gosh, yeah, he was bullish on Target, kind of right before the tip over, so to speak, and I did pick that off, and I just like, no, this is a bearish one for one. It's going to take a while, and it certainly did. It ranged for a while, but it eventually broke down. Let me get that on the grid real quick. We'll talk about that. Ah, yeah, that one for one down was just glorious. I picked it off on a weekly chart. Immediately, I just mapped the primary move. Here's the secondary move. There was an analyst target. They did downgrade it at one point from, I think it was, 175 to now 130. Man, like clockwork, that became the accumulation zone. And we got a one for one down even lower out of that. But I ended up getting short kind of a little early. I think I was short right in this area. Um, I didn't take my profit here. I was distracted by stuff, but it's such a long thing. I've got like a leap spread on this situation, and because I knew it was going to take a while for this to shake out, ended up adding to that position at this peak here once it rejected that price target, and been happy ever since. And I think I might start looking to close it later this week, but pretty methodical price action. You can look at this with like your basic market structure chart, and it's just the same thing. It's just capitulation and more. So when we find support around 92 to 94, I might get interested in a long position. But my 5-year outlook on it, I wouldn't give one right now. I'd give maybe to the end of this year. I'm thinking it'll finish this move and maybe accumulate down here for a while before we get decided on direction. Just my opinion. But I am definitely enjoying that short. Let me double check that the YouTube feed's working here. Something's a little weird.
All right.
And if you want to dig into the first thing he's got on the list there, STZ, if you wanted to go ahead and do that, that'd be really cool. Kind of curious on that one. Kind of worked
Yeah, I
out.
mean, STZ's in no man's land for us. I mean, it's you got the 200-day moving average at 238. You have a real significant low at 237.22. So, I mean, for me to buy it, I'd want to see it bounce off those areas, and for me to, I mean, I guess I could see shorting it here, but it just looks so overextended. I mean, the spot to short it would have been somewhere in the 250s.
Yeah, it's kind of in an area where it's for me it's interesting, but it's not that interesting. And I think last week we were talking about it making a bearish retracement down to half this trend, and it's pretty much done exactly that. We got a 9 out of 10 last week, by the way. And the one that we didn't get right, it went in the direction we knew, but it didn't exactly reach the targets we thought. But hey, that's not bad. not to not to pat ourselves on the back so hard we break our elbows, but we're entitled.
Yeah.
We can live with that. That was really fun. And to boot, we got to chuck old Jimbo under the bus a couple times there. It was pretty fun.
Yep.
But the whole reason we're doing this is just mainly to kind of not necessarily shame anybody. We just want to go and take a technical analyst approach to all the stuff that is called out on mainstream media, because it's really just a lot of times I find everything they say is literally a liquidity grab or liquidity trap for retail investors and traders. You know what I mean? And that's kind of why I want to do this. I want to not only show people how to find their own technical analysis skills and utilize them, but just to be able to take what all the mainstream media is saying about these different companies and equities and stocks and bonds and the whole shebang, and just make your own assessment on it, to be able to do your own due diligence and come out on top. That's the whole thing. I know Cramer kind of was talking last night. He's like, I'm here to do exactly what I just said. I'm here to show you, what all these are about. I want to teach people how to do this. He said the same thing I just said, quite literally. But the thing is, he doesn't really do much technical analysis. He'll go and pick a chart off, and he'll tend to like we agree on everything. We're like, he top ticked that one or he bottom ticked this one. It's all the same. He's going, hey, I'm bullish as hell on something that's overbought.
Well, yeah, and I don't think he really does any technical analysis. I mean, he'll quote other people's technical analysis. I mean, Larry Williams, he likes to talk about all the time. So,
Yeah.
I mean, I always make sure to keep a wall between a Larry Williams pick, because I know and respect Larry Williams, versus a Jim Cramer pick.
Right. Absolutely. And here's one I didn't draw on it at all yet. I wanted to save this for the live action here. He mentions Molson Coors, TAP is the ticker there. Let's see here. It says gets price target bumped to $58 per share from 67. So I'm going to mark both of those. It's really a dollar range, so I don't really care. But I kind of want to know what those targets are. So let's mark 68 and 67, and I want to kind of look at something here. There's 68. There's 67. And I'll make the new target light and the old target dark. I like to color code things, and I like to pick off anything that I want to stand out to me, and I'll put purple. That's just the way I like purple. So effectively, we've got a range up here that, okay, it's already blown through this, but now they give an upgrade for a dollar bill above this. It's all bearish, and the moment it comes out, what happens? It sells off. I mean, that's pretty insane. So here we are on a daily chart. This is what we've done so far. It's down here to $60.77. Well, how do we know better? Look left. That's a hell of a reversal pattern, I mean, plain as day. You can see it. I know you can see it. We can see it pretty readily. But I mean, if you're the average retail investor and you hear upgrade, you're automatically thinking, oh man, I'll buy this one. It'll be a great investment. Dude, look at the chart. The chart's going to tell you. And the chart never lies. We always say that. I'm going to look left even further and pick off a couple of things that stand out to me here. So whenever I see, this capitalization, and this is market structure to its finest right here, got this giant inverse head and shoulders thing. This is a long-term trading chart. It's not something you tend to want to day trade, but you can still run some option strategies on it for sure. I always recommend that. But the thing that stands out to me is this key area right here. It lines right up with resistance over here, and it happens to be the middle of a measured move. Now we've broken that. So what's expected? Well, we typically will look for the next support area, which is going to be right in here. You can see where all these candles kind of line up. Pretty easy. All right. We got more or less a measured move, one for one, up to the top of this range. We're very likely to hit down here around $58 and some change. Pretty simple stuff, right? So looking left is going to really, really give you the idea. And here we are opening after an upgrade, right down. And we're right in the middle of a gap zone. So we can kind of mark that out as well. I know people love looking at gaps, retail, and not necessarily institutional traders, but retail traders tend to notice those gaps pretty readily. So we get like a primary and a secondary price target out of that. It's pretty simple. We know that this is going to be our ultimate goal, to hit this low. So if we're short on this thing, we can stay short. And if we're looking for a point of accumulation where things can start coming down to decision time, we know that we're going to look for some action in this area, base of the gap. We notice here it was resistance for this bar here. That's a daily chart. Pick off your 2-hour price action. It all lines up. Let me compress this way down. And this is one hell of a bear bar. We got a pretty easy target if it continues to go lower. Sure. We can trade all of this. As far as that upgrade goes, I mean, it's just plain and simple. His show comes on, I think it was on 8 Eastern last night when I picked it up.
No, 6.
Oh, 60s. I didn't pick it up till 8. Nonetheless, you got this little, they give it an upgrade. Bam. I don't know if maybe he didn't, I don't think he talked about TAP last night. Well, he said something about it. He said Molson Coors is starting to be in a bullish position. Come to think of it, he was bullish. I should have taken notes. Yeah, top ticker. I think we kind of see that pretty easily. But we got to wonder, like, where's he getting his dope? And that's exactly it. He doesn't do technical analysis. He just kind of puts his ear to the ground, gets what other people are saying about it, and kind of parrots it. And my gosh, dude, this is devastating for people who bought into that yesterday or even this morning. That is just nuts. I feel that in my heart. But for us traders who know better, we were pretty quick to pick up a short on that. I didn't short this one, but man, I wish I would have. But I know where it's going. Pretty simple. Kind of moving on. He did mention AMD and Nvidia again. Chip makers. He was saying, like, as money was flowing out of the bond market and or out of all the banks and stuff like that were kind of failing and all that stuff. And it makes a point there. People are going to put money into companies that don't have a heavy debt load as the interest rates are rising, and companies that have lots of cash on hand. And certainly chip makers absolutely blew that out of the water. As far as AMD goes, though, I've been kind of on again, off again relationship when it comes to trading AMD. Sometimes I'll trade it when the setup's good. Sometimes I won't. This trend is kind of hard to ignore. We get the weekly out. I know there's a bunch of lines on this chart. You can see I'm always interested in looking at AMD, but we've got kind of a mid-range area. In fact, I'm going to change the color of this one just so it stands out to me. We have this trend down. It's made that move down to a key support area and it's come back up through what I was looking at as kind of a point of interest for when I was bullish after it broke that descending channel here. Now I'm kind of looking at this like, well, I'd love to see it accumulate in this range. I know things are a little shaky and the supply chains. I know there's some things going on fundamentally that are affecting this, but I'm going to trade the price action and technical analysis. This is hard to trade. I'm not going to mess with AMD till I see a better setup. That's all I'm going to say on that one, really. There's really not much else to say about it.
Yeah, I mean, if you could have gotten it when it undercut and rallied above the 200-day, it would have made a nice trade. But not a lot, not a lot here. But I mean, again, you got jobs numbers tomorrow. If the market ramps, this will ramp with it.
Oh yeah, yeah. It's going to be an interesting day tomorrow. Come to think of it, we're looking at a bunch of range trades on the S&P that we've been taking off. We've kind of got measured moves down pat. I mean, the price action for measured moves has just been methodical for the past since Monday, well into last week even. But yeah, today it's going to kind of come to a head and range, and we expect that. And then tomorrow, when the news pops out on the jobs, this market's going to do some fun stuff. It's going to be quite volatile, and we're going to pick off a few setups that are going to look good here today that might not look so good tomorrow. That's a good time to kind of sit on your hands and wait and see what shakes out.
Yep.
So as far as positions go, we always say this, we can't say it enough. Cash is a position too. And in spite of inflation kind of eroding at it, it's better than taking a loss on volatility when suddenly the market does something unexpectedly. And that's kind of what's on the radar.
And cash is a position, especially now, that you can get over 5% on it.
Absolutely. That's the other thing. I noticed Robinhood was kind of getting into deciding to get into the credit card market, but they're already also paying pretty good interest on the swept accounts if you're willing to pay for the premium services. But then a lot of other brokers are kind of going that way too. I noticed Webull just sent me a notice saying they're going to offer 5.2% or something like that without paying a fee, which is cool. I use Webull for my charting. I love Webull charts. They're gloriously beautiful. But I know that some of the other brokers are going to kind of follow suit. But I kind of wonder, what about some of the smaller, lesser known brokers? I mean, you got like futures accounts with like Trade of 8, and Ninja, and a couple others. I wonder if they're going to kind of do that with swept cash as well. Kind of an interesting space.
I would assume everybody is going to, have to go in that direction. I mean, if not, just put your money in T-bills and leave your broker. I mean, they're going to have to do it.
Pretty much the same way. Um, I kind of also look at this with the sense of being a homeowner. I'm not going to touch my 2.9% mortgage. Heck no. But you look at the rates going up like this, and at some point it's got to come to a head. They got to start cutting rates eventually, and that's what I kind of wonder is like when that transition happens, we're going to start seeing market money move out and move it into T-bills and bonds and such. So while everything's high, it's funny to see. Yes, they're just now offering all of these, swept account interest earning type of stuff on your cash. But I've seen there's some front runners in this, and then there's some other brokerages that decided to kind of stay away from it until now. So it's kind of interesting to see that. Okay, well now the rates are high. Let's get you in there. Put some cash in the brokerage. Cool. I'm good with it. I'll trade anything that moves, including cash. So
Sure.
if it moves, it moves. But I kind of wonder how that's going to shake out once the Fed does finally start cutting rates, and that'll be definitely interesting to see. Nvidia was one other quick mention, of course, and I don't think Nvidia's ever off his radar. He's always jumping up and down about Nvidia. We talked about this last week, and it did exactly what we knew it would do. It came down and hit this target like a charm. Now we're kind of setting up to where we went and did the retracement back to that zone. So we spoke a little bit about that as well. Kind of sideways now. I'm not taking a position in Nvidia just yet.
Which makes sense. I mean, massive, massive, massive move. It's got to consolidate.
Right. And in consolidation comes this giant bull flag looking thing here. And I know I'm not the only one looking at it. I had to throw a different type of analysis on these when I start to see this happen. And I'm going to draw it for you real quick. You guys have probably seen some of my videos on the diamond pattern, and this is exactly what I'm going to talk about just for a moment. Whoops, that's not where the starting point should be. It should be over here. Sorry. Haphazardly going through this and drawing live because our list is short today and our time's a bit short too, so I'll kind of keep it brief. But when you start to see range compression after range expansion, you can kind of guess where the center point is going to be. This is a very badly drawn diamond pattern, but when you get parallels, I messed that all up. I'm sorry. There. Get parallels, you also get channels. You get a bull channel and a bear channel. And when it breaks, you have all your targets predetermined. So what I'm looking at with NVIDIA is I'd like to see it expand a little bit on the output side of the range that's in now from this measured move. And once we start to break into one channel or the other is when I'm going to be interested in it. That's probably not going to happen until about mid-November here. So I think the interest is going to be kind of taken away from trading NVIDIA until then. And even though it's high on Cramer's radar, he's always talking about this thing. This is a time where you can take little day trades and swing trades. That's great. I might even consider doing some of that. But in the meantime, I'm going to wait for my long-term position until it gets to this point, and we decide whether this is going to be a reversal and retrace back to a reasonable price, or if this thing's going to blast off and take a big old bull move. So I'm kind of on the fence with that. I think I'm going to hold off on taking any long-term positions in NVIDIA, but I do have an interest in taking long-term positions on that if I can generate income on the options, and that's where volatility is king. So
makes sense.
Yeah, I think I'm going to wait for that. But I love that diamond pattern, and if you guys have ever seen it, I explain how to find them. This is probably the worst diamond I've drawn. I'm doing it in a hurry, but you get the idea. Usually, you get an output with a couple different outcomes, and you get all the price targets in between. So it becomes tradable within the diamond, and then outside the diamond is when you start making decisions on what your longer term swings are going to be. So yeah, I'd certainly wait on that one. Um, Only a couple more mentions in that list. We got AMD and NVIDIA out of the way. He was jumping up and down about Costco yesterday. Any thoughts on that? I know Costco is
Yeah, not a lot. I mean, looks extended on the long side. I'd like to see it break through the 10-day moving average to short it. It's what, 2.5 points, which for Costco is really nothing. Also I'm not real bullish on the consumer.
right.
So, I think there are better things in retail to short. I mean, Abercrombie and Fitch, for example, even though, I mean, it's not the same as Costco, but yeah, nothing here for me except maybe a short at some point.
I know last week I was mentioning we had that fan line set up, and we had the megaphone pattern. And this is the one we weren't 100% accurate on, but it was one where we got the direction right at least. And we basically said if it breaks this angular, typically you'll get a measured move outside the channel and then a return to it. Didn't happen last week, but we did know that there was a key pivot in this area, and it was likely to pull back and test that support if it rejected this angular, and that's where we were half right. We got the direction right. We knew it was likely to retrace if it didn't break this line. This was the gray area stock. This was the 10th stock that we're like, well, we got 9 of them pretty much dead on, but this is the one that was just kind of eluding me. So yeah, I agree that it's just not quite interesting enough to take a bigger position, long or short, in just yet. I'm gonna wait for this accumulation in this range to shake out and take a direction. But I do want to point one thing out though is this trend could actually reverse up here. We could start seeing this accumulate and make a couple bear moves. So if the sky is falling crowd and they've been talking about the economy being terrible for a long time, well, market typically precedes the economy. So if we're looking at Costco, if we see some hint at potential bearishness, that's kind of not a canary in a coal mine for me, but it's an indication of things to come in the retail space. And this is certainly in an area where I might start looking at possibly going bearish if it breaks this support line. So I'm going to make this one red. Knowing where that liquidity was pretty clutch, though. We knew exactly where the upper range of resistance was going to be. Pretty easy spot. But yeah, I think I'll wait on trading Costco. I know I have a few friends who actually work for Costco, and of course they're shareholders. They take advantage of the 401ks there, and you look at the guys who have been there for a long time. They're doing great with their 401ks and that thing. And this is the time where I would be like, well, I might see about balancing. Maybe, I don't know. It's just my opinion. I've worked for many different companies in the past where some of them where I've had 401ks in them, and I'm like always watching the charts even before I got into trading, and I'm always kind of like, well, maybe I might move some of this into a different area of the 401k. And back then they would charge an arm and a leg to do that, but usually it saved more than it lost. So did well with that. As far as taking a position change in a 401k, it's definitely difficult. But if you take on your own retirement funds, if you're running in an IRA or something like that, where you can get some of those funds transferred out of the 401k into the IRA, like a lot of people do, this is where options income starts to really make sense, because a lot of times in a traditional IRA, you can sell options against your position, and covered calls are awesome for controlling loss or helping to alleviate some of it. So that's where I'm getting at with it. Don't go completely messing with your retirement account, but take a little control over them. And certainly if you get into being able to chart stuff, you can make some actions to keep your wealth, so to speak. Oh man, I wish this list was longer, but he didn't really say much. He got a little bit into the automakers and, kind of hinted at Ford going bearish on us a little bit. And I know we talked a little bit about Ford. I took a short-term long position on it on that little breakout, but man, it kind of took a dive after that. It hit my target, went back to being bear mode again.
Oh yeah, no, that doesn't look so good.
No, in fact,
GM looks even worse.
yeah, I'll get to GM too in a moment. I've had some old dope on GM. I didn't take an additional short position on GM yet, but I did take a short-term bearish position on Ford. But now I'm looking at this like, wow, if things really get bad in that space, that's one hell of a primary move for potential breakdown. And we hit the critical support and broke it just today, yesterday. And we're in an area where we might start seeing this thing reach for the 1140s. Um, Considering a short in that for SJIM there?
No, he's hasn't been unequivocally, buy these guys.
Right.
So, we've been short Ford a lot, but until I get him real, and I mean, and it's so extended to the downside too.
Right.
It's just not my. There are better opportunities.
You certainly don't want to pull a Jim and bottom ticket.
No, I mean he's good at. He top ticked oil this morning.
Oh, God.
So I was up early. He sent out a tweet saying, "Hey, I'm surprised that oil is up." And then the moment he hit send on the tweet, oil went down like 1.5%.
Funny how that happens. I know it has nothing to do with the actual action on that, but it's interesting how like even last night he was a little bit getting into like oil could hit $100 a barrel again, and I keep throwing this back in people's faces. I don't like to be political, but dude, this is running up to an election year. I mean, there are things in motion that will help control oil prices and keep them as low as they can. Plus, the other thing is demand on gasoline kind of fell through. I know China has been a little less active industrially, and that certainly cuts into the demand on that side.
Yep.
But here in the States, it's kind of it doesn't really swing as big as it does over there, and there's a certain amount of stability in this market. And that's kind of what controls the prices of gas on our side of the pond, so to speak. But I wonder. You've got other things in the field that are kind of influencing. I mean, you got the whole ESG thing, of course. You've got electric vehicles being pushed, but the infrastructure is just not there. I know some people who are into a lot of bullishness on the infrastructure side of things, and I'm just like, well, how the heck are they going to do this fast enough? And then what effect on oil is that going to have? Well, realistically, they're pretty good at kind of reading, what the output of the refinery should be. So that's pretty easy. But the short term stuff is going to be choppy. Certainly when you get a decline in demand on China all of a sudden, it kind of ripples through our market. And it's exactly what we're seeing. And in the moment Cramer was like, well, this could be the bottom of that demand rut on China's side. Um, Saying oil looks like it could go higher, and then boom, instantly drops. Well, we know that it takes a little while for those things to take effect because there's also a little thing called storage, and when demand's low, they can build up storage. So there's still flowing, but, the producers are going to be the bottom dollar on that. But as for GM, yeah, I'm almost considering a short here. As soon as it breaks this previous low, I'm game because I've had this thing on my chart for a long time. That is a really big measured move. I also kind of take a little joy in shorting GM because I just don't like them. But yeah, I've been a mechanic for 20 years before I became a trader, and although GM is probably between GM and Ford and a lot of Mopar stuff, they've been paying my bills for most of that time. Not by default. I'm not saying they're junky or anything. It's just a matter of there's more of them on the road than there are pretty much anything else except for Toyota. But I love working on Toyota. They're built to be easy to work on. Whereas like GM and Ford and if we can even still call it Mopar, they're a pain in the butt to work on most of the time. They're all as American as they try to say they are. They're very multinational. And when you get one one place making the engine, another place making the transmission, another place making the body. The engineers don't always see eye to eye with where to put things, and as a mechanic, like, it makes it very difficult to work on some of those. So that, and the political side of things, as much as I just dislike being political on any situation, when they were sitting there with their hand out begging Congress for some tax dollars to keep their business alive and keep jobs in America, and then they take it and ship most of it to China. That hits me right here, because that is the worst thing you can do, is literally take our money out of our country after begging for it. And that's just why I really dislike GM in that matter. So whenever I short them, I smile ear to ear. I think of it as getting my tax dollars back.
There you go.
So I see a nice setup here. It's certainly got potential to be, more bearish than I'll get at. But I'm going to put just one more line on my chart. And if you've ever heard Creed and I talking back and forth, we have an inside joke about my charts have more lines than a 70s coffee table. I was actually strolling through a Goodwill the other day, as I look for antiques at Goodwill sometimes, because you can find some really neat stuff there. And there was this literal 70s mirrored coffee table. I'm just like, oh my gosh. I took a picture, I sent it to Cree. We both had a great laugh. And, like, hey, I found a place to draw my trend lines. So, long story short, I tend to put a lot of lines on my chart, but I always tell people, whatever makes sense to you. Don't copy my charts, but certainly whatever makes sense to you, draw on your chart however you like. Whatever works for you to find the answers in the price action is what you want to do. But certainly I'm looking at this as kind of the tripwire for GM. And it's just a matter of looking left, finding previous lows, and figuring out where we're at now. I can see GM being a very glorious short in the long run. Just wait for it to trip that wire. But in the short term, looking at the daily chart, we've already got the setup breaking. We got the primary move here. There's your accumulation. Here's your secondary move. And I'm always talking to my members about half and whole. And, if you take and draw the box, as I always do, I'm going to draw the short term, and I'll leave it blue for now, but I'll probably shade it something else later. Pretty simple. You split the difference in the consolidation. There's your target. But then you kind of want to take and split this up a little bit. So here we've made a third of that move. We can have primary targets as such. So you can take your short here and take profit here and wait for this to consolidate and break down. Breaks that line, trade from here to here. And then if it breaks this line, trade the rest of the move. You can be a pivot trader. It's pretty neat. But yeah, I'm definitely interested in shorting GM because, like I said, it makes me smile. Stellantis, should I even look at Stellantis, or do we have a minute? I know you're a little pressed for time today.
Stellantis is, that's an interesting one.
Let's take a look. STLA is the ticker.
Yeah.
I have yet to trade this thing in a long.
I've never
time.
traded it either, but it's below all the moving averages. To me, it's two directional. If it kind of hits up there and goes down, basically breaks below 1850, I could see it being a nice short. Could also see it being a long.
Yeah, let me dig into this a minute. That is probably the biggest megaphone pattern I've ever seen in my life. It's done both. Okay, let me go to the common trend line right there. And I don't need to draw the rest of it, but what I do see is we have kind of an indifference here. There. Now let's go to our daily. Gosh, I'm going to have to crush that down. Uh-oh, is Weeble being weird? It's not showing up on the daily. Wow, okay. Let's go with what we have. So, let me look at this. Yeah, you can see exactly what you just said. It's either a short or a long at this point. Got a primary move, got a 50% retracement. Short term, I could see it being in consolidation. Long term, it'll probably make a move like this. This is just my take on it. I always tell people, like, when you're making your trade plans, you take and add if this, then that situation. You're like a programmer, and that means. And this is our primary move here, but we can see where we've accumulated in this area. So if it breaks the support line, sure, we can take a trip down here. It's just sizing up the upper half of this move, or upper third of that, 2/3 of that move. That's a little sketchy. I don't like necessarily drawing it this way because there is sort of an angular at play here, and that's why I tried to draw on the weekly chart and transition to the daily chart. Maybe I'll just do it here. Pretty simple. Break this line, go this way. Stay above this line, go that way. So yeah, it could be either long or a short. I think we'll sit on our chart for this one, let this play out in the next week and see where we can find a better setup. It's certainly in an area where it can be interesting for some short-term traders if you're just starting out in equity trades, or if you're running a big fund where you kind of got to trade equity. It's at that $20 range where it's very effective to take some size into a position there and get the action. Yeah, I'm gonna wait a couple of days and see if this does A or B. That could be a good either setup. Well, with that, we're kind of down to the end of the list. It was very short today. Jim didn't have a lot to say about, or had a lot to say about nothing yesterday, and today too. And then,
I mean, I think he's unwilling to come out with anything ahead of the jobs number. Except I did think he said something about how the market could rip big tomorrow. So probably be a crater.
yeah, because he said it. No, but I'm with you. Job numbers are certainly going to cause a rip in the market, but rip up or rip down. You can't take a bias on that. He's certainly not touching that, and a lot of analysts won't. I always kind of reiterate, trade what's in front of you. Don't take a bias into a point of volatility. Price action is essentially volatility, and when we're trading SPY, and my gosh, if you want to see what a bunch of lines on your chart looks like, I walked through a whole bunch of stuff this morning to pick out all liquidity zone and stuff like that. You start breaking down into smaller time frames that we end up trading, and we know pretty well where all those targets are. Easy trades, right? You can see I've marked pretty much everything in the pre-market, and it's played out beautifully so far. But you get into that. You're not going to take a bias in this. You're going to trade what's in front of you. You can find all the areas of interest just looking left, and then you just trade them as they get there, and you don't have to have any bullish or bearish bias on that. Tomorrow's the day for volatility. Well, looking left, you can see where all the volatility has happened. You got your jolts and all that stuff. We know exactly what that did. Leading into the next volatility trip, we could do either or. And if you look at the weekly chart, we're kind of in the middle of the zone here. We can go lower. We can go right down to here, about 408 on SPY. Sure, if things are bad tomorrow, we could crater. We've already got that kind of set up in the price action. We've got a primary move here. We can say, okay, this is consolidation. Once this breaks, either it's going to go right back up to the middle, or it's going to go a full measure down. Kind of already know that. So it's looking a little bit more bearish than bullish for tomorrow, but I'm not going to take a bias. I'm going to trade what's in front of me. I always recommend that. So if you're a day trader or a swing trader, certainly do not have bias. And to kind of quote another analyst out there who has his own YouTube channel, he has something stuck to his chart, and it basically says, react, don't predict. That's exactly that. Trade what's in front of you. Don't take a bias into it, because most of the time you'll get spanked. And that's why even analysts like Jim Cramer won't touch the jobs report. He's going to be pretty neutral on that one.
I mean, I always say trade based on what you see, not based on what you think.
Absolutely. That's the thing. You literally react and don't predict. You can certainly predict where the price action is likely to go if it trips a zone. Sure, you can trade from one zone to the other. That's great. All you have to do is know where the zones are. It's kind of exactly what we say every day in our live stream. We just make sure that people are trading what's in front of them, and that's the most important part. The hard charting's the easy part. The hard part's going to be your discipline, and that's exactly it. You're going to have to resist that urge to trade your prediction and follow what you're seeing, trade what you're seeing. Good stuff, man. I really enjoy this, and I love doing this every week if we can. As long as you can stand me.
Yeah, yeah, no. I mean, most weeks I should be able to do it.
Sweet. All right, we'll do this again next week. I'd love to, if I can, try to keep to like an 11 o'clock schedule if we can. But I understand things kind of change for us traders. Sometimes we're fitting life into our trading, so this is kind of how it goes.
Yeah, no, I mean, that should work, except for the odd time when it doesn't.
Absolutely. And today was an exception for me. I wasn't able to get someone to cover my live stream this morning, so I crammed it all in, and I actually made it work better because I got to explain a lot in the pre-market to our members. And now I'm going to go back and I'm going to show our members how we find all these targets and all these zones and stuff in depth and take it into a swing trading approach. And the beauty of it is all this stuff can be practiced on a 5-second chart where you get loads of repetition. Take it to your daily and weekly chart. It does the same thing. It's beautiful. So stay tuned, guys, and come check us out if you would. Thanks again for
All
joining me,
right,
and we'll see you again
cool.
next week.